The Orlando apartment sector produced some real good numbers in 2Q 2011, solid growth in both occupancy and in rents, but we shouldn't get too excited yet. This one still has a lot of work to do. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Orlando update. Let's lead it off with the good news. Everyone likes good news, and Orlando's giving us some in 2Q 2011. For the U.S. apartment market as a whole, second quarter was the best quarterly revenue growth performance in a decade, and Orlando was right in the middle of the pack with that. Strong growth in both occupancy and rents. We had a 0.7-point improvement in occupancy and a 1.6% jump in same-store rental rates. Put those two together, and we get revenue growth of 2.3%. That's a great performance, one of the best Orlando has seen in a long time, although 2Q 2010 was actually better, and that was the best quarterly performance among Florida's largest markets. We saw revenue growth of 1 to 2% in Fort Lauderdale, Miami, and Tampa, and just under 1% in Jacksonville and West Palm Beach. Okay, so we've milked the good news as much as we can, and now we've got to put these good quarterly results into a little bit of perspective, and when we do that, Orlando is not looking like the happiest place on earth. Let's start with the overall occupancy story. You see occupancy is still at just 92.8%. Now that is better than Tampa or Jacksonville, so there's some positive spin for you. But you can see that there's some concerns looking at the occupancy trend line over some time. You see that Orlando bottomed out in 1Q 2009 at 88.6%, and we did see some decent progress since then. But what we see in Orlando is that it just hasn't been able to maintain consistently strong momentum. After some good growth in the first half of 2010, it really stalled out over the following 9 months before seeing that decent uptick in 2Q 2011. And it's the same concern on the pricing side, a lack of consistent momentum. You can see some solid rent growth in 2Q and 3Q of last year. And then we actually saw some backtracking before rents started climbing again in 2Q 2011. So year over year, same-store rents climbed only 2.1%, and that put Orlando in the bottom 10 nationally in terms of annual effective rent change among the nation's core markets. Now, Orlando's a market, like a lot of places in the South, that sees a big gap in performance between the top tier and the bottom tier. But one reason Orlando is still struggling is that even the top tier, the overall results still aren't that great. In the apartments built in the past 2 decades, occupancy rates are still below 94%, and rent growth is below 3% year over year. And only one submarket posts an occupancy rate of 94% or better. That one is East Orange County, which is comprised primarily of a dense pocket of apartments around the University of Central Florida. Occupancy there is at 95.6%, way above the pack, and up 1.5 points annually. But even with that strong rate, effective rent growth was only pretty moderate at 3%. So, all in all, an uneven recovery in Orlando's apartment sector, and operators are telling us that one big reason for that is a comeback in the shadow market pool of privately owned single-family homes and condos that are offered for rent. One of the things we've seen recently is a big jump in transaction volumes, that is sales of single-family homes and condos, even though prices are still sliding. So what we're seeing is investors buying up these properties and putting them back into the rental pool. And that increase in housing inventory or rental housing inventory is making it difficult for apartment operators to achieve much rent growth. And that's going to remain the challenge going forward. We think that occupancy will improve, but that competition from the shadow market is going to keep rent growth at pretty mild levels for the foreseeable future. And that wraps us up for Orlando. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.